market. Sit rep here at T3 Live, Matthew Buckley, the Chief Options Strategist. And we have a slew of conflicting macroeconomic data, both here in the United States and across the pond. Let's just take a look at the raw data, and then we'll dig into a look at it. ADP, big swing and a miss. 208,000. We were looking for 223,000. So that's kind of a big miss there, and a little revision up to the previous month, but that's kind of a yawner. Productivity, non-farm productivity came in line, but revised unit labor cost, quarter-over-quarter number, was a big miss, and the final services PMI was a little bit of a miss as well. ISM, the non-manufacturing PMI, kind of a strong beat there. So we're seeing stuff all over the place. But we also had some news across the pond as well. The euro's at 2-year lows right now. On Thursday, tomorrow, we're actually going to have an ECB meeting, and we're going to see what Mario Draghi has to say. The market is full-on expecting some further easing, some QE, maybe even some direct asset purchases of sovereign bonds, and hell, maybe even jumping into the stock market, kind of like the Bank of Japan is doing via their largest pension fund, and even, from what I understand, potentially the Bank of Japan is doing. But when you peel back the onion a little bit, that ISM services, fourth highest on record. But the PMI, as we talked about, it absolutely imploded. So just 15 minutes after one survey indicates a drastic slowdown in domestic demand for services, another one says it has never been better, because the U.S. services PMI is at a 5-month low as, quote, domestic demand weakens. Okay, let's quote this. Whereas the manufacturing slowdown was largely linked to weaker global demand and a renewed fall in export numbers, moderating growth in the service sector is a sign of domestic demand weakening. So you can be confused for having a little bit of whiplash looking at these two macroeconomic data reports. And as I said, ADP was a big miss, and it's actually the worst November in 4 years. So with that ADP miss, it's really it's no kidding a jobs program to me, the ADP number, because for the rest of today and tomorrow morning, a bunch of 28-year-old coffee breath Goldman Sachs folks and analysts are running around Wall Street coming up with their new numbers, unemployment numbers for Friday. And we'll see Thursday everybody else, from Deutsche Bank to Goldman Sachs, Morgan Stanley, come out with what their Friday number is going to be. But like I said, the biggest thing tomorrow is the Mario Draghi meeting. We'll see the Challenger job cuts number. That's not too market moving. It's just another canary in the coal mine. But the jobs number on Friday is obviously going to be the big mover with us. And consumer credit at 3 o'clock, on a Friday before the market closes, will be interesting to see as well. Really good looking trades in our weekly options model portfolio. We have a Apple Iron Condor that's up $1,400 since Monday morning. That's a 53% gain. We still have about $1,200 to go. So I'm liking this. Actually, it's a bull put spread. I'm sorry, it's not an Iron Condor here. Was thinking about legging into one. We actually have a SPX Iron Condor that's it's down $330, but the bull put spread's looking good, 65% profit for $1,275. The bear call spread is actually the 2075, 2080. So obviously with us up here 2070, this one's down $1,275. So essentially this trade's flat, zero. But with an Iron Condor, let me group these together. Obviously, with an Iron Condor, it's a credit spread. And whenever we sell something, we love what we call theta, right? Time decay. I have a saying that unched on the day equals time decay. So if the S&P just kind of hangs out today, we get what is called theta. So we're up $150 on this trade. Let me go to the spectral analysis on our Trade Monster platform, and you can check out, as I'm recording this video, I'm making money potentially via theta, what we call time decay. So every second that goes by when we sell something, we get that time decay. So let's take a look over here. So take a look at the Greeks down there. Theta, you can see it down here. So theta right there. Theta accelerates, look at that, all the way into expiration. So hopefully by Friday, we are between our goalpost of 2045 and 2075, and we'll retain that max profit of nearly $3,700. So really good looking trades, and we have a Goog bull put spread on that's looking okay right now. It's down $225. It's the 530, 527.5. As long as Goog stays above 530, we make our max profit. of $1,800. Our break even though is all the way down at 529.40. So anything above 529.40, we're making money. So good trades, good looking model portfolio. Let's take a month to date performance. It's December 3rd. Is up really, really nice on a bunch of different positions. Okay. All right. So I got to run. Happy hunting. Make sure you hedge. And I'll be back with Thursday's market sit rep here at T3Live.com. We'll see you.